Let's talk about gold. For literally thousands of years, it's been the ultimate symbol of wealth. But these days, if you actually want to invest in it, wow, the options can be kind of confusing, right? So in this explainer, we're going to cut right through all that noise. We'll break down the 5 main ways you can invest in gold, from holding a real physical bar in your hand to just owning a digital token on your phone. Let's dive in.
In this quote, it gets right to the heart of the entire debate about gold. It really frames the central question we're going to explore. What is the actual difference between owning something tangible, something you can physically touch, versus just owning a piece of paper that says you own it? Just keep that question in the back of your mind as we go. So before we jump into the how, let's just spend a quick minute on the why. Why has gold been the go-to safe place for your money for centuries? Well, it's always been seen as this super reliable store of value, especially when everything else in the world feels, a little uncertain.
For investors, gold really wears a few different hats. It's seen as a solid hedge against inflation. The idea being its value tends to hold up even as the dollar's buying power goes down. It's a shelter when the stock market takes a nosedive, and in some really extreme cases, it's protection if a whole currency collapses. But honestly, the most important point on this list is that last one. It's a real, tangible asset that you can hold, one that exists completely outside of the entire banking and financial system.
Okay, now that we've set the stage with the why, let's get into the how. We're going to walk through the 5 main paths to investing in gold, and we'll start with the most traditional and work our way to the most modern.
First up, the absolute classic, physical gold. We're talking about buying actual bars and coins. The huge idea here is that you completely eliminate something called counterparty risk. See, with most investments, you're relying on someone else, a bank, a broker, to hold your stuff and make good on their promise. But with physical gold in your possession, that risk is just gone. There's no middleman, you own it, period.
But of course, that brings us to the big trade-off. On the one hand, you've got real, private ownership of an asset that doesn't depend on the financial system at all. That's a huge plus. On the other hand, you've got a very real logistical problem. Where do you keep it safe? And that means you either need a serious home safe or you're paying for insured storage in a professional vault.
Now, for anyone who wants exposure to gold's price but doesn't want the headache of storing it, there's our second method, gold ETFs. These are incredibly popular, and it's easy to see why. They are so convenient. You just buy and sell shares through your normal brokerage account just like a stock, and those shares are designed to track the price of gold.
But all that convenience comes with a major catch, and this really gets back to that quote we started with. With an ETF, you don't actually own the metal itself. You own a paper claim to it. You can't just call up the fund and ask for your gold bar. It's a financial product, which means you're totally tied to the stock market's hours and all its rules.
Okay, option 3 takes us in a completely different direction. Instead of owning gold, you can own shares in the companies that are actually digging it out of the ground. We're talking about gold mining stocks, like Newmont or Barrick Gold. Here, you're not betting on gold, you're betting on the business of gold.
And this is a classic risk versus reward situation. Because you're investing in a business, its profits can multiply way faster than the gold price alone, so you get much higher potential gains, and sometimes even dividends. But the flip side is way more risk. Suddenly you're exposed to everything from bad management and high debt to, say, political problems in the country where the mines are located.
So what if you want the security of physical gold, but you want it for your retirement? Well, that brings us to our 4th method, the Gold IRA. This is a pretty specialized retirement account that lets you hold actual, physical gold bullion, all while getting the tax advantages of a normal IRA.
The process might sound a little complicated, but it really just boils down to 3 steps. First, you open a special self-directed IRA, then you fund it, and finally you choose IRS-approved gold to buy. That gold is then held for you by a licensed custodian in a super secure insured depository. Basically, it's a way to get the security of physical gold combined with the tax benefits of a traditional retirement account.
And finally, our 5th method brings us right to the cutting edge, digital gold. We're talking about crypto tokens where each token represents direct ownership of a specific amount of real physical gold that's being held in a secure vault somewhere. It's a really fascinating mix of a timeless asset with 21st century tech.
The appeal here is all about accessibility. You can trade it 24/7, you can buy tiny little fractions of a bar, and you can get started with very little money. The trade-off is trust. The material we're looking at highlights the platform risk. What happens if the company fails? The regulations are also still a bit of a Wild West, so it's absolutely essential to check if the company's gold holdings are audited, and, this is crucial, if you can actually redeem your tokens for the physical metal.
Okay, so we've got 5 totally different ways to get into gold. But the analysis we're pulling from here does not treat them all equally. In fact, it builds a really powerful case for why only one of these methods truly delivers on that core mission of preserving your wealth, the very reason most people turn to gold in the first place.
And here is where that argument just snaps into focus. When you compare these methods across key factors like real ownership and system risk protection, a super clear pattern emerges. The core thesis is this: only physical gold checks all 3 of those critical boxes. The others are just financial instruments that operate inside the system, while physical gold is an asset that operates completely outside of it.
And that brings us to the simple but really powerful conclusion of the analysis. If what you want is true control of your wealth, especially during a crisis, holding the physical asset yourself is presented as the only real guarantee.
So, what does this all mean for you? Look, the point here isn't to tell you what to do, but to give you a clear framework so you can make your own decisions. It all comes down to what your personal mission is for this investment. What are you trying to accomplish?
So let's try to align these methods with some potential goals. If your number one priority is long-term stability and just preserving your wealth for the future, well, the argument we've explored points directly to physical gold. If you're on the hunt for higher risk and bigger speculative gains, then mining stocks totally fit that profile. And if what you really care about is modern access and being able to trade 24/7, then tokenized gold is the path to look into.
Which leaves us with this one final question that really gets to the absolute heart of it all. Ask yourself this: is your goal to simply trade the daily ups and downs in the price of gold, or is it to own a timeless, tangible asset for security? Answering that question for yourself is the first and honestly the most important step in your entire journey. Thanks so much for joining us for this explainer.